Welcome to Barchart, series of webinars designed to educate you about a variety of market concepts, to inform you of the features and tools Barchart provides related to these concepts, and finally to offer you some trader's insight to help you make a more informed investment decision. Today's session, using multiple time frame analysis for better entries. Now, if I had a room full of science students and I asked them, if we were going to plan a mission to Mars, what would be the first thing we would do? And I bet you I'd get a variety of answers, from building a rocket ship to training for the journey, determining how much fuel we need. And yeah, these all are justifiably good answers. But I would argue the first thing that we should do is find Mars. In other words, how can we plan a trip if we don't know where we're going? And well, technical analysis and trade planning are similar to our mission to Mars. How can we plan a trade without knowing where price can go? Multiple time frame analysis allows us to determine where price can go, the path of least resistance, let's say, choose the trajectory, the trend, and give us an alignment to give us better timing for our liftoff. Hello, everyone. My name is John Rowland, Barchart's head of trading education. In today's session, we're going to discover how to use multiple different time frames with a variety of technical analysis to determine when a cluster of evidence signals when probability has lined up in our favor. Now, before we get to that, please welcome my partner and our moderator, Barchart's project director, Jean Baker. Hello, Jean.
Good afternoon, John. How are you?
Doing well, and yourself?
I'm doing great. Doing great. Thinking about that trip to Mars.
Yeah. You and Elon Musk, right?
I don't think so. I'll take a pass on that trip. How's that?
I think I will too.
Yeah.
All right, you ready to get started, Jean?
Absolutely.
All right,
Okay.
great. So just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or hold or trade any securities is best made with the advice of a qualified financial professional. Now, every trader has different styles, goals, and risk, and the process that we're going to talk about today is, and by no means should be construed as an endorsement or a recommendation of either any stocks that we're going to show, or even a potential trading style. And under no circumstances shall we be responsible for any losses or damage that you or anyone else incurs as a result of trading or investment activity that you or anyone else engages in, based on the material or information that you receive through barchart.com and or our services. Okay, so where do we start in this process of multiple time frame analysis? So first, we're going to choose the highest time frame. This time frame will help us discover the primary trend, and it should be higher than the time frame that we might actually trade in. Now, the purpose is to determine where price is and where it could potentially go. Now, this process will work regardless of your style. This is what I'm going to show you: a buy and hold, a swing trader, a day trader, or even a multiple of different types of markets. But for demonstration purposes today, I'm going to assume equities, and I'm going to choose weekly as my highest time frame. Now, the studies that we're going to use in this assessing for our so-called path of least resistance, or identifying our primary trend, are going to be, if I'm using a daily chart, I'd be looking at, let's say, the 200-day moving average. Now, because I'm going to be talking about starting at the weekly level, well, I'm going to be using a weekly chart. So I'm going to look at a 40 period or 40-week moving average. Now, 40 weeks is pretty close to 200 days. We're going to look at something called ADX, which is going to help us confirm our primary trend, but it's also going to help us determine the strength of that trend. We'll look at MACDs. This is going to help us determine the momentum of our trend. And then finally, we'll look at Bollinger Bands. And Bollinger Bands are going to serve two purposes for us. First, they're going to alert us of changes in volatility. But more importantly, in this process, on the first step of the higher time frame, it's going to give us identifying areas of opportunities, which I kind of call zones of action. So let's go to our bar chart, and let me start with just a simple market. Let's start with the SPY. And what I'm going to do here is, just to make it a little bit easy for me, I'm going to go to dashboard. So it's just presentation-wise, it's going to look a lot nicer for us as we walk through a lot of these examples. All right, so first thing I'm going to do is I'm going to change my time frame to here. I'm in a 3-year data field with a weekly. So now what I'm looking at is all the bars here represent a weekly time frame. And so what do we say to our first process? Well, we're going to look at moving average, just to kind of give us a sense of what is going on. So I could come into studies and go down here and look at moving averages. And, there's all different kinds of moving averages. But if I just pick on the regular simple one, notice how mine is already preset to 40. So I could choose that and add that. But I also have templates. Now, if you're not familiar how to do templates, we do have some instructional videos that shows you how to templates. And I do have a template that has a 40-week moving average. Matter of fact, my template has both the simple moving average and the exponential. Now, the reason why I did this was I kind of just want to show you a couple of points here in terms of moving averages. And sometimes we get this question: do you use a simple or do you use an exponential? So I just want to show you that that when we look at markets that have, let's say, a normal volatility or a subdued volatility, notice how as the S&P was rallying here, there was really not much difference between a simple moving average and an exponential moving average. It's only when the market starts to get a little bit more volatile, as you can see here, you get a lot wider price swings, that you can see a difference in the moving averages. But they pretty much mirror each other. So, it's really the preference of the trader. The other thing I want you to recognize, though, too, is that a moving average is a lagging indicator. In other words, it follows price. So in an upsloping moving average, an uptrend, that the moving average tends to stay below price action. And so what typically happens is when price comes back towards that moving average, that usually is an actionable opportunity. In other words, price will respect the moving average and then move away. When price doesn't respect it, and that could be a sign of a change in trend. And notice that for this rally all the way up, we stayed well above the 40-week moving average. And here you can see that on this bear market that we've had for most of last year, every time price came back to the moving average, this was just another opportunity for us to sell the market. All right, so the next tool we said we're going to look at is ADX, or what is called the average directional index. Now, this was developed by Wells Wilder, and he's probably notable as the grandfather of technical analysis. But what the ADX does is it helps us determine if there is a price trend, and it consists of 3 components. Something called the negative DI, which is mine is represented by red. I've changed the defaults that Barchart provides because I think red being down, and the plus DI line is, I've changed it to green. Again, plus go, green up. And then the ADX line, which here I've represented it as in black. Now, I'm not going to go into the math and all the details. If you're interested in all that, we do have a library of technical indicators. You can look in there and it'll explain all the math and the common interpretation. So let me boil this down for you to its simplest form. So the DIs represent a proportion of today's trading range that is outside of yesterday's trading range, with how much is that corresponding with up moves and down moves. In other words, a positive DI means that today's price range, a certain percentage of it was above yesterday's price range, then it would be defined as a plus DI. Now, the ADX is just an exponential moving average of the absolute value of the DIs. And what this does is, the way we can think about this is that the DIs, excuse me, tell us who's winning the battles between up movements and down movements. And the ADX is really kind of a relative strength in that battle between up movements and down movements. So I've added the ADX here, and again, the rules are pretty simple with this one. When the DI lines cross, this generates a buy or sell signal. Now, for our process, this is really going to alert us of the beginning of a new trend, not necessarily a buy or sell signal. And a rising ADX confirms that new trend and its strength. Now, Wilder went on to add a caveat, and his caveat was that you can't really rely on the ADX line and the DI lines until you get above 25. Now, I'm going to go through this in a second. The other part of Wilder's caveat was that when the ADX line, the black line, is below 20, that really is signaling a trendless market, or sometimes referred to as a sideways market. So currently, what do we see? Well, we see that our red DI, our negative DI, is above our green, which is telling us the price action over the last period of time that this index is set up as, that we're seeing more downward proportional days than we're seeing upwards proportional days. But also notice that we see that the black line, the ADX line, has started to decrease, which is telling us that the strength of this trend is lessening. In other words, this downtrend is starting to turn into a no trend. And currently, you can see that the ADX line, let me go here to settings for a second, and I'm going to go into scale, and I'm going to stack my studies, is below 20. So again, that caveat that we are below 20. But let me just draw a line here, a horizontal line, and let's put it around 25. And I'm just right clicking on the line, and I'm going to just put in 25. And so let's go back in time a little bit here, and we can see that here's where we got that crossover, where the red line, the negative DI, crossed over the green DI, which is telling us that there is more selling, right? More proportional selling than there is buying. And that would correspond with the price up about here. But notice that not until we got above 25 can we really confirm that selling activity. The other thing at this moment here is where we see above 25 for the DI. Notice that our ADX is still well below 20. So again, we can't really confirm this price action until that lease gets above 20. And even Wells Wilder went on to say that, to give you a really great confidence, you really want to see that above 25 as well. But here's the 20 line that would correspond up there. You can see at the top where that would confirm our downtrend, and then really that positive confirmation where we have a lot of confidence would have been around this level here. You can see where, and this is really right about where our 40-day moving, excuse me, a 40-day week moving average went from what we considered maybe neutral to now turning downwards. So the other thing we said we can look at is our MACDs, momentum oscillator. And again, I'm not going to change much here because we use the defaults. And what does a MACD tell us? Well, it just tells us momentum of current price action. Again, so some of the common interpretation is when the MACDs cross, the MACD lines cross, that could be a sign of a buy signal or a sell signal. Again, at this time frame, we're just going to look at momentum. But here you can see where our fast crosses are slow, and that would be a common interpretation of a potential buying opportunity. And you can see that the histograms are showing that we do see some positive upward price momentum. But again, with MACDs, we can't confirm a trend until both the MACD lines get above or below our zero line, this neutral line right here. So both lines are still below, even though the momentum is up, it doesn't confirm an uptrend. So we're getting a little bit of mixed cross signals here, but certainly what we're kind of seeing is that our downtrend has lost its momentum, or it's not really trending, and that we're starting to see maybe a little bit of an upward price movement. The other thing that we said that we could start to look at is Bollinger Bands. Now, Bollinger Bands are a measurement of volatility based on a standard deviation. Again, I think I have a very good webinar session when we talk about Bollinger Bands. But what we're going to do with Bollinger Bands here in our process is we're going to look for what I call zones of opportunity, or zones of action. And so how do I do that? Well, let's first talk about Bollinger Bands just briefly. And the basic theory behind Bollinger Bands is that when the bands are narrow, it's telling you there's not a lot of volatility in the market. Now, notice in this uptrend, we had relatively narrow bands, but certainly the middle line here, this brown line, that's our mean. It's telling us we still have an upsloping market. What do we see here? Well, we see our bands are a little bit wider, a little bit more volatility, but in recent weeks, right, the last month or so, the bands are narrowing. It's telling us that there's volatility is coming out of the market. Now, in terms of where price action is, our mean, this is our brown line, is still trending lower, again, confirming what we see from our primary moving averages, but price action is kind of little popped above it. And so we're kind of in this, again, a cross current of market analysis. But what we're going to do is we're going to say, okay, where is price in this range based on the Bollinger Bands? And then this is going to kind of give us an idea of where we think market might move, but also when price gets to those areas, this is going to give me some permission to take some kind of action. Now, I don't know what the action that I'm going to take, because it's going to differ from every market and every time frame and every scenario. On an upper band, I could be looking for a selling opportunity. But again, if I'm in an upsloping market on an upper band, I might actually be looking at breakouts or buying opportunities. I just know that when price gets to these lines, this is where I'm going to start thinking about taking some type of trade action. Now, if we look at how I define the lines here, right at the edge of the Bollinger Band lines here, we're stuck right in the middle. Again, kind of, we're not really seeing an emphasis one way or the other. Ideally, we would probably, in this scenario, we would probably want to see us at the higher end of the bands, because our momentum and our moving average, our moving averages are downsloping, probably want to look for selling opportunities. But here we're not really getting any true signal. All right, so for the S&P right now, it doesn't look like there's really, at this higher time frame, not really getting any great signals, but certainly we could make a case that we are kind of just trading sideways to slightly lower. Let's look at some markets that are actually trending. So here's Tesla, a very common stock. And again, I can just eyeball this, right? I can use the picture here. And this one, I think if I just let you look at this, how would you define this market? But again, I just want to kind of go through this process with you. So I'm going to go for my moving averages. Again, what is this telling us? Well, we've just recently rolled over, and now we're starting to see that the moving averages are starting to turn negative, and also price action is accelerating. So this is a good sign if you are looking for a shorting opportunity. If I add my ADX, what is my ADX telling me? Well, again, right, an upsloping ADX line, that's a good sign of a strengthening trend. Our red line, our negative, is above our green. Again, another strong indication. And there was that crossover here. We see the crossover came around the 22 level. Again, probably want to wait until we get above 25, which would be around here. Notice where that corresponds with our price action. And again, right around where the 40-week moving average starts to turn downward. Now, as far as the ADX line here is when we got that signal, notice that our ADX was still well below 20. So to really confirm this trend, we got to wait until it gets above 20, which was about here. But again, Wells Wilder says if you want total confirmation, well, then above 25. So again, probably just in the last month or so. And so after that, we'll look at our moving average, our momentum indicators, our momentum oscillator, and what is our oscillator telling us? Well, it's telling us this trend, this primary trend, has a lot of momentum to it, right? We got that common interpretation, the crossover right here. And this is where it lines up with the price action. And again, not until we see both lines below the zero line can we confirm the downward price action. And that came about here. Again, notice where that lines up with our price action. And yes, the momentum is very, very strong. So in this case, what we're seeing here is another confirmation of what we've already seen in our higher time frame trend analysis. After the MACD, we'll look at our Bollinger Bands. Again, not necessarily looking for standard deviations. What I'm really kind of just doing here is thinking about setting those things or those zones of opportunity. So what do we see here? Well, we see that our Bollinger Bands have widened. So that is telling us there's more volatility in the market. It means that there's more potential for price movements to be greater. And certainly if you've been watching Tesla recently, you know that it has some huge daily price movements. But because our ADX and our momentum indicators are both showing strong downward price trends, our line of action, we're going to shift this a little bit. Instead of drawing a line in the outer band up here, which is probably just too far away, we're going to set a line of action at our mean. Because remember, what we just said is in a downsloping market, we want to try to look for opportunities when price returns to those moving averages as trading opportunities. And again, I'd probably be more inclined to be a seller when price returns here. And then I'm going to look at that lower green line to set the lower end of my range. Now, if I look at where current price is, you can see that we're in the lower end of this range. which doesn't give me comfort about looking for shorting opportunities at this time frame, but certainly my momentum and the strength of our trend is strong. So, um, I would still be looking for more shorting opportunities. As far as what this is telling me, is probably telling me to be a little bit more patient and look for a selling opportunity that maybe is a little bit higher and not going short right here. All right, so that's Tesla. So let's move away from Tesla for the moment and let's look at an upsloping market. Now, this is Travers. This is one of the companies that was in my webinar a couple weekends ago, a couple weeks ago, where we looked at 23 stocks for 23. And again, let's go to our weekly. You can see that, just eyeballing this, right? That really, I think you could probably identify this as an uptrend. So let's start with our moving average. Again, in recent weeks, it's starting to pick up, looks like it's starting to pick up some momentum. And again, remember what I said to you about these moving averages, exponential and simple, that the more volatility, then that's when you start seeing a little bit of distortion. And you can definitely see that. But again, the points that I was trying to make before is that when you have a defined trend, that when price returns to the trend, that is a tradable opportunity. And you can see that there was multiple times here where we re-engaged the moving average. Now we did flop around here a little bit for a while, and that's typical of markets. But, still now we're trending higher. What's our ADX say? Well, let's see. Again, our ADX, right? Our green is above our red. That is a sign of an uptrend. We got the crossover here. Again, a crossover looks like just around 25, so that would have been a good sign. You can see where that is relates with our price action. It's where price went back above that upsloping trend line, right? And that would be, if you think about just trend line or moving averages, this is definitely a common interpretation. But what is our ADX line? Our ADX line is still just today getting above 20. So only to about today can we really confirm that we see this uptrend. And if you look at our moving average, it's this is where it wobbles, right? So now we're starting to pick up some momentum. Well, let's see what our momentum is. And yeah, there we go. Our momentum has turned positive, and both our MACD lines are above the zero line, again confirming an uptrend. So now we have a market that we can look at in terms of an uptrend. If I go back to my Bollinger Bands, again, to find those areas of action, just like we did with Tesla, because price action is above our mean, well, we're going to use the mean as an actionable area and then our upper band. And again, here we can see we're kind of in the middle, but unlike with the S&P, which was just going sideways, we are in the middle on the rise. So this certainly looks like the market has momentum to the upside. As far as the path of least resistance, right, there's absolutely no resistance over here, right? We're making, I believe this market is making close to all-time highs. So there's really nothing standing in our way for a price to go up here. Now, again, do I going to sell up here or I'm going to buy up here? I don't know. I'm going to wait till those conditions happen. Do I want to buy or sell down here? Well, most likely at this point, I probably want to be a buyer, but conditions will detect what I'm going to do. All right. So we looked at the S&P, we looked at a down market Tesla, and we look at so let's do this. Oops. Let me try this. So now what we're going to do, we're going to drop down to an intermediate time frame. Now our intermediate time frame here is going to be based on what we're going to probably do is what is going to be called our trading time frame. This is really kind of where we're going to design our trains. Now, what we want to do is we want to identify price action. Again, we're going to use those same kind of studies, our strength and momentum of our trend. And you can see some of the studies that are here, the ADX, the Bollinger Band, the MACD. Now, the two that I'm going to add in here now are the ATR, the average true range, and the RSI. Now, let me just pause here for a moment. I don't have enough time to go through all the process to do the ATR. I apologize about that. But I do have, I believe, is an exceptional session that is called ATR, average true range, is the Swiss Army knife of technical analysis. And in that one, I really go into detail how you can use ATR to help you with your probability and your targeting accuracy. So we're just going to kind of look at RSI in this segment here. So the other thing that we need to understand in this process is as we drop down to this intermediate trend time, as it compares to our higher time frame, we want to use something that's called a factor. In other words, we want to look at a time frame that is smaller than our higher time frame by a factor of somewhere between 4 and 6. That's kind of the guidance. So if we think about weekly, there's 5 trading days in a week. So if I go down to a daily time frame, then I've gone down by a factor of 5. And when I go to the lower time frame, we're trading equities, and there's equities trade about 6.5 hours a day. So I'm going to go down to an hourly, and that would be a factor of 6. So depending on your style of trading, it doesn't matter, if you say you're going to use daily as your higher time frame, and maybe you use 4 hours or 2 hours as your intermediate, and then you use a lower time frame, or maybe you might even be using 60 minutes as your higher time frame. But just keep that factor multiplier in mind, that you always want to go down by at least 4, but as much as maybe 6. Okay, let's go back to our dashboard. So let's drop down to a daily, and can I make this chart a little bit bigger so we can see this? And so let's start with our Bollinger Band. So again, here's our blue line that we drew in our Bollinger Band on the weekly level. What's kind of our trend, right? Our trend is up, our Bollinger Band is up. So what I could do in this case is I could add another line at the mean. And, I could add a line here as well. And I just want to kind of show you that there's that blue line. So if I did this process in terms of based on the Bollinger Band at this time frame, the mean, and I compared it to, let's say, the weekly, we're kind of in low in this probability of range. Again, probably more room for this market to run to the upside. There's not much in the way, and there's a lot more speed bumps on the downside. All right, what's our ADX? Well, again, strength of our trends in this intermediate time frame. Again, we still see our green is above and our red is below, but our ADX is below 20. So in this time frame, even though price is above our moving averages, we really haven't defined or confirmed an uptrend. And if you look at these moving averages, they're kind of moving sideways. Now, what is our Bollinger Band doing here, right? It's kind of starting to widen, which is telling us maybe volatility is coming to the market. So at this point, where this actionable line here is, This might be a breakout trade. In other words, I want to see price get above here and then look for a buying opportunity, right? Because where would be the path of least resistance? Way up here. Again, I don't know if that's going to happen. I don't know what is going to happen at any moment in time. I'm going to wait for those conditions. What's our MACD? Well, again, our MACD has turned positive. Both of our lines are above the zero, again, confirming positive and uptrend. So that's a good sign, right? The only thing that's holding us back is the ADX in terms of strength of trend. So the other studies that we can add is our RSI, or our relative strength index. And what do we see on our relative strength index? So in this case here, what we see is that our relative strength is starting to show, again, more positive momentum. It's not in an overbought condition yet, and it certainly has not even near an oversold condition. Now, I want to talk about RSI here a little bit for a second. There is a phenomenon that does happen with RSI, and that relates to the strengths of your trends. So when you have a strong uptrend, what you will do see is you will get more of a dynamic shift in the RSI. In other words, if we look at RSI, typically we would say a 30 level would be oversold and a 70 level would be overbought. But in an uptrend, what typically happens is that you won't get an oversold condition even when price goes down. And usually what we'll see is that it'll hold over a value around 40, because it shifts up. And oversold probably wouldn't occur until, let's say, 80. But I wanted to point out to you, as you can see here, as we got down close to 40, right, where price re-engaged our moving average, and then now we're back above 50. So the RSI here is showing strength as well as our trend. And the fact that we didn't get below an oversold condition is just kind of confirming to us again that we're seeing a strengthening of a bull market or uptrend. All right. All right, let's go to Tesla. Again, I'm going to drop down to a 3-month daily time frame. And what do we see? Well, again, our ADX very strong. Our DI line is negative, D line is above our green. Our trends still going down, right? Our Bollinger action, again, I could draw a line up here, but because I have confirmation of a down sloping market, I'm going to go closer to the mean. Now, which is kind of interesting for today, notice that our weekly Bollinger Band lines up with our daily. So that is what we call a line of confluence. In other words, that means that that's more significant. So whatever trade action that one price comes there, it's going to be more of a significant probability. Probably in this case, if we got back down below that, that would be probably a sign that Tesla was going to make another leg lower. But in the moment, we do see that the Bollinger Bands are coming together, and that is kind of indicating that we're going to revert back to the mean, and that's exactly what we're seeing. What's our momentum? Right? Our momentum has crossed over, typically a buy signal, and we're just starting to get some positives on the histogram. But again, we can't confirm an uptrend because our moving average, our MACD lines are still below the zero. So a shift in momentum in a downtrending market. So this might be an opportunity for us to let price rise a little bit and look for a shorting opportunity. Now I'm going to go to the SPY, but when I did this morning, I was going through the process. You're going to see that the SPY is basically telling us what we discovered on the higher time frame, right? A crossing of mixed signals. We are gaining some positive momentum. Our ADX has gotten back above 25. Excuse me, our positive DI is above 25, but our ADX is still way below 20. So again, if we think about actionable in terms of the S&P, probably not even thinking about the S&P until we get at least above this actionable Bollinger Band. And I think really in terms of what we've discovered at the higher time frame is, again, probably not even thinking about any kind of trade until at least we get up there or even down here. Now, notice that both of these blue lines, when we look at it on a daily basis, represents a swing low and looks like a very significant recent swing high. It looks like there's a couple of them up here as well. So again, a confluence of evidence. All right. That takes us to our next segment, which is how we break this down into the lowest time frame and where we can start looking for those entries and or exits. Now, the purpose of the lower time frame is not a trend analysis. All right, I'm not going to look at what price is doing in terms of trending in these lower time frames. What I want to find is timing that corresponds with my primary and my intermediary trends. So we'll go back and look at Tesla and Travelers. Remember, Tesla is in a downtrend and Travelers is in an uptrend. So I want to start looking for clusters of evidence in the lower time frame that are going to align with my primary and intermediate trends. In other words, I want to buy into an upsloping market. I want to sell into a downsloping market. And the purpose of the lower time frame is really for us to help us to reduce our risk, which also will help us to increase our reward. So the studies we're going to use are going to be similar to the ones that we just talked about, RSIs or MACDs. But notice here, this is where we're going to rely on them to give us buy and sell signals. Again, remember, with our higher time frame trends. So how do I relate this to you? So let's think about an RSI. An RSI represents common interpretation is overbought or oversold. So we want to think almost counterintuitive here, or in other words, contrarian. What we want to find in the lower time frame is when the market has moved to an oversold condition in an uptrending market, and then wait for that common buy signal as price moves out of the oversold and starts gaining RSI momentum. Same with the MACDs. We're going to look for those MACD crosses that give us the signal that is in line with our higher time frame trends. We can look at the 9-period EMA to help us decipher price movement as a trend, but also more likely what I like to use it is for to help me to enhance those zones of action. Again, ATR, I'm not going to spend a lot of time in that. And then we'll look at something called floor trader pivots or pivot points. And another tool we can use is called the VWAP. I don't know if I'm going to get to that. I apologize for that one. That might actually be a session in itself. All right. Let's go back to our dashboard. Let's go back to Tesla. All right, so we're going to drop down now. We're going to drop down another time frame here. I'm going to go to the 1 month, 60-minute intraday. Now, we don't need our Bollinger Bands anymore, so we can get rid of them. And we don't need these moving averages anymore. We did say, though, we could add an EMA, or exponential moving average. And you can see how mine is already set up for a 9, so I will add that. We don't need the ADX, right? We've already determined a strength of our trend. We are going to use the MACD, and we said that we're going to use the RSI. All right. So what was our higher time frame trend? What was our intermediate time frame for Tesla? Down. Notice here, now we have our layers of action, our zones of action. And at this point here, as a trader, this is where we start thinking about other aspects of a trade. How much risk I'm willing to, what's my profit target, right? If I take a short here and I believe that the market is going to go lower, right? Is there enough reward until that next actionable level? Or do I want to wait for price to go higher because this area represents a better area of resistance than maybe this area? But then we could also use these other indicators to help us enhance the determination of these zones of action. So what we see in our MACD, well, we got the common interpretation, right? The MACD crossover somewhere's close to an area of action for us. So that could give us permission. What's our RSI doing, right? Well, price is moving higher in the RSI, but the RSI did not make a new high. It didn't get into the overbought. So maybe I need to be a little bit more patient, but some folks would interpret this as a negative deviation. And what was the other thing I said about RSI? In strong trends, we get a dynamic shift. And so you can see that we didn't even get to oversold, because in a down market, the RSI actually shifts lower. So the fact that we stayed below 70 and now are moving lower, that would give us onus to allow us to look for a selling opportunity. Now, next study, well, let's talk about the EMA for here a second. What is our EMA doing? Well, again, I'm not looking at this in terms of a trend analysis. I'm kind of just looking at what is price doing based on the EMA, and it's kind of holding above it. Again, I probably would wait as a confirmation is when price movement falls below our EMA. So yeah, our EMA is kind of floating along. It's not really giving us any direction at all. Here we can see where our EMA is definitely trending down, and every time price re-engaged that was a great selling opportunity. So again, I'm probably going to wait for that to turn negative. And the other one is our pivot points. And there they are, sometimes referred to as floor trader pivots. And you can see we have multiple layers. Do this. And what do we see? Well, what we see here is this resistance level. This is our pivot point here. This resistance is our first resistance, our second resistance, and our third resistance. You can see our second resistance does line up with our area of action. So as a trader, I'm going to be patient. I'm going to wait for a price to get up there. Now I might wait for price to get up there and then wait for, some kind of confirmation. Wait for the EMA to turn lower. Wait for, the market to go. Now, if I wanted to join a momentum trade, right? Certainly, we are seeing that momentum based on the MACD and the RSI, but I probably want to wait until see price fall back below the pivot. So here again, all these lower time frames here are telling us there is a selling opportunity developing, but we still need to use a little bit of patience. All right, let me do Travers real quick. And I do see a lot of questions, some good questions popping up, and I want to answer those before we move on. And let's go down to our lower time frame. Again, we don't need our Bollinger Bands. We don't need the moving averages anymore. We said that we could add the EMA to help us kind of find when intraday momentum changes. Okay. We don't need our ADX. We do need our MACD and our RSI. All right. So again, where are we in our lines of action? Again, notice that this line of action lines up with an area of resistance. Again, probably where I'll be more inclined to be a seller, right? My momentum indicator has crossed below, but it's starting to lose a little bit of momentum. But it certainly looks like momentum is still moving down. And again, RSI just recently came from an overbought scenario. Again, counterintuitive. That's kind of what we want to see at the lower time frame. And when it fell out of the oversold, that might have been a better opportunity to take a short trade. But for today, going to use a little bit of patience. Now, if price gets down to this line, again, excuse me, I'm talking about Travers here, I'd be more inclined to be a buyer. Let me back up here. I was talking about Tesla here for a second. Here we see, again, this line of action here, because my primary trend and my intermediate trend are still up, my thought of action here would be, and again, I apologize for this, would be more inclined with looking for some type of breakout. But again, this does give me that caution where I'm saying I want to make sure that price gets above here before I even think about adding to my trade. And again, that probably is, if we did get up there, that would be where our momentum indicators would turn positive again. So again, I got a little mixed up in my markets, but in this case, we can use our lower time frames, again, indicators to help us define, right? Our EMA is still moving up. We're coming into this area of action, an area of resistance, right? As a trend trader, I got to clear that area of action. So maybe the buying opportunity is actually when the price goes higher. And I think if we go back to our ADX on this one, and this is what kind of threw me for a loop here for a second. Let me go back to ADX here. I think what we discovered was that on our intermediate time frame, yeah, we have that momentum, but we haven't gotten the ADX above 20. So the actual line here would be, again, above us as a buying opportunity, but again, waiting for price to clear that level. Okay. All right. So Gene, let me pause here a second. I do see a lot of questions, and I got to put my glasses on for this.
No worries. So John, while you're reviewing the questions, there's a couple things I want to point out. A few of you have been asking, where can I find John's previous webinar on average true range? A couple other questions on where you can find previous webinars. Toward the end of the session, we're going to go to our webinar archive page, and there you can do a search. For those of you who asked questions about previous webinars, I've sent you the link over there with specific sessions to look at, but you can easily find the recordings and the replays of sessions that John has done on these different indicators before. So John, I do have one question that has come up from a few users. They're wondering whether you're using a logarithmic scale when you're looking at longer term stock trends.
Yes, that's a great observation for those of you that picked up. And the reason why I did that was because with Tesla and with the S&P, we're looking for a lot more data, and we have a large amount of price movement. So yes, I do, excuse me, scale, right? I do use logarithmic when I'm using those higher time frame analysis. Now, if your stock is a $15, $20 stock and it's in that range for a longer period of time, then a linear chart will do. But I think just off when you start looking at a lot of data, especially when we're doing that high time analysis, that logarithmic chart does give you a little bit better representation. Okay, so let's go down a couple of the questions. It says Zach asked, would I consider buying a stock that had a 8% buy a bar chart opinion? So again, Zach, it depends on the trader, but if I'm looking at a stock that has a 8% buy opinion, well, that tells me that there's a lot more downside price momentum than there is upside price momentum. So there'd be a lot of conditions that would need to swing in favor of that stock for me to look for. In other words, in the higher time frame, I would want to really see it really low in that range of our Bollinger Band range. In other words, I probably wanted to see it maybe even outside of that lower Bollinger Bands. In the intermediate time frame, I would want to see, maybe those are the technical indicators that would be turning positive. Those are the ones that have given you a slightly buy rating. That could give us, that onus of that momentum to the upside. So, to answer the question, it depends on the stock. It depends on the timing. There'd be a lot of things that need to line up for me. I would rather wait until I see a lot more confirmation to look for that buying opportunity. Question is, what's the best time to swing trader? Well, even swing traders, there's different swing traders. But let's say you're a swing trader for 3 to 5 days, a week at the most, maybe 2 weeks at the most. Then what would your higher time frame be? Well, we probably want to start catching trends. If you think about it, if you're only going to be in a trade for 5 days, you probably want to start to catch trends where you can identify a trend at a much lower time frame. In other words, so you can take advantage of a 5-day price movement. So maybe daily would be your higher time frame, but then maybe you would go down to, like, let's say a 4-hour or a 2-hour trend time frame, and then go down to maybe 60 or 30-minute lower time frame. Okay. Wayne, one of my regulars. Hey, Wayne, how's it going? It appears that when the exponential line crosses the average line, more often than not, it leads to the other indicators. Yeah, they're all basically the same kind of idea in terms of price movement and how they are defined. But you will, again, Wayne, think about this in terms of clusters of evidence and this confluence, right? When you see a crossover on different moving averages, and then that lines up with a MACD, and that lines up with your ADX, then that gives you more confidence that what you're seeing is more reliable. And that leads to another question that I see here is, why would I just use the 40? Why couldn't I use multiple moving averages? And yeah, that's exactly what we want to do. That's why we're going to change moving averages as we move through different time frames. So Rick asks about divergences in price indicators. Do I look at that? That is definitely another aspect of oscillators. So what I wanted to do today was not necessarily the interpretation of these indicators, is the process, right? Figuring how to get to Mars, right? That higher time frame. Let's start lining things up. Let's start looking for those opportunities when the stars are aligned, when our primary trend and our intermediate trend are doing what we think they're doing, and they have nice probability. And at the lower time frame, we're seeing the market move from that contrarian to confluence. Let's see, what is the best intermediate time frame? Henning's asking. Again, Henning, it depends on the style of the trade. It depends on your risk. Here's a guideline for you. Your intermediate time frame in terms of risk assessment. When you start setting trades up, even though we might use a lower time frame to find cheaper entries, so to speak, we're still probably going to need to use the intermediate time frame to set your stop, set your risk. So what would be the best intermediate time frame for you would be how much risk you're willing to take on based on that trend time frame. And what you'll discover is that, every trend time frame has a different risk value to it. So the optimum trend time frame would be the trend time frame where you can manage, or it's the risk that you can afford. I know that's kind of a little copped out, but that really is about how trading is. Okay, so I think I answered most of the questions. If I didn't answer all your questions, make sure you send them to support@barchart.com. We have a crack staff, and if they can't answer it, they'll pass them along to me. All right, so let me finish up real quickly here. Apologize for going. So there's a couple more slides in here. I just put these in here for reference for you, just guidelines. So we talked about what the ADX is, really kind of help us the strength of our trend, or ATR. Again, I didn't do that. I'll show you that in a second. Bollinger Bands, remember, volatility is our bands narrowing or widening, and right, and also using that concept of looking for those zones of entries or exits. Our 9-day EMA, if I'm doing a daily time frame, strength of our trend, our intermediate. But if I'm in an intraday time frame, as the question was asked before, then I'd be using a 9-period EMA. 20-day moving average, again, this could be used as an entry and exit signals when price crosses. That's usually a great indication. Again, that will probably be found in an intermediate time frame. For my buy and holders or my longer term investors, the 50-day moving average is a good rule in terms of risk management, what I call that hard stop. Now, again, I might have a soft stop. I might have a stop that is above the market or above or below a 50-day moving average, depending if I'm in an up market or a down market. But this is kind of our where we could think about adding a stop for, the worst case scenario, right? When the market gaps 5% overnight, where events that we're not aware of. So that's just kind of a general rule. 20-day moving average or the 40-week moving average is a great for a longer term primary trend. Our MACD, remember our MACD we're going to use as a buy and sell signals in our lower and intermediate time frame, but we're going to only rely on MACD in our higher time frame to give us that momentum or strength of our trend. RSIs we can use as overbought and oversold conditions in all time frames. Remember, in the lower time frame, we kind of want to look for that contrarian, right? We want to look for overbought in downtrending markets, and we want to look for oversold in uptrending markets. And I did do pivots. I didn't get into the VWAPs, and I apologize for that. So this is a trader's checklist. Again, this is more of a reference for folks. This is adapted from John Murphy's technical analysis of financial markets. And this is kind of this step down process. And I want you to kind of look at this in here and see what we just talked about and really look at this checklist. And think about it like a pilot, right? This checklist of things you need to do before you even take a trade. So if we're talking about equities, what's the overall market doing? Is the market a bull market? Is it a bear market? That's the equity that you're looking at. What sector is it? Is that sector have relative strength or does it have relative weakness? What is our stock doing in that weekly, that monthly, those Bollinger Bands? Where's that roadmap or that path of least resistance? And what are my trends? So the first half of our checklist is all talk about trend, right? What is the trends of the market? And then what are our significant levels of support and resistance? Can I identify channels, trend lines, moving averages, gaps? I've done a lot of sessions on gaps. There's 3 or 4 sessions on gaps. Chart patterns, those of you who are familiar with like candlestick patterns, continuation and reversal. Price objectives, that's where ATR comes in effect. And there, down at the bottom, is 10 technical evidence to support our assessments. So all this process I just did you, this down time frame analysis, you can see that this is actually the 10th of our step, right? And then once we discover a trade that we like, then we have to do our risk management, okay? All right. Wow, that's a mouthful, Gene. All right, so as Gene suggested, well, let's first talk about next week. We're going to look at our futures trading guide for my futures traders out there and how we can optimize. It's going to do a lot of the same kind of material that we just did here. We're going to look at a lower time frame to find better entries and also to confirm those trends that we're seeing that the futures trading guide use. Again, the futures trading guide is a premier feature for those who are our premier members out there. So we do offer a free premier trial for 30 days. Next week, Friday, for my premium members, I want to remind you of our market and close, and you can just come in here and click on here, and you go right to live streaming, and there's no sign up for that. So I recommend for my premium members for that. And the question was, where do we find those archives?
Right, and John, a number of people have been asking if your slides are available. So yeah, let's look at this search here. You're searching on the word knife, or you could search on the word ATR. ATR would have pulled that up as well. Go back to, just click back to the archive webinar, or clear that search out for me. There you go. Today's session is right there. And if you click on that, John, the recording obviously isn't there yet, but this is where it's going to be. And right there is where you can download the slides in PDF format from today's session if you so wish to. Okay,
All right,
thanks, John.
Gene, I think that's it, right? I think we got everything, right?
I think so.
Thanks again for another great session. I hope folks enjoyed today's session. If you're watching on our YouTube channel, give me a thumbs up, drop a comment, and tell me what you liked about our sessions. And so next time, stay safe out there. Best of health and the good of all trading.